Hello everyone. Welcome back to our channel. If you're new here, I'm your name, and today we're diving into a fascinating topic in the world of finance, junk bonds. Now, before you start thinking that bonds and finance are boring, let me assure you that understanding junk bonds can be incredibly valuable, especially if you're looking to invest wisely. So, grab a snack, sit back, and let's get started. But first, you might be wondering, what exactly are junk bonds and why should you care about them? Junk bonds, or high-yield bonds, are bonds that carry a higher risk of default compared to investment-grade bonds. This means that the companies issuing these bonds are more likely to face financial difficulties that could prevent them from paying back the principal or interest. To put it simply, junk bonds are like the bad boys of the bond market. They're often issued by companies that are either struggling financially or are in the early stages of growth and haven't established a solid track record. As a result, they are rated below BBB- by credit rating agencies such as Moody's and S&P. Now, let's break this down a bit more. The credit rating assigned to a bond reflects the likelihood that the issuer will be able to repay its debts. Investment-grade bonds, on the other hand, come from companies with strong financial health. They're seen as safer investments, which is why they come with lower yields, essentially, the interest payments you receive as a bondholder. Let's look at some real-world examples to illustrate this. One of the most infamous junk bond issuers was the telecommunications company, WorldCom. In the early 2000s, it was found to have inflated its assets by $11 billion. As a result, it filed for bankruptcy in 2002, leaving investors with worthless junk bonds. On the flip side, there are companies that have successfully turned their fortunes around. Take Tesla, for instance. Before becoming the giant it is today, Tesla issued junk bonds in 2017 to raise capital. These bonds had a high yield because investors were taking a risk on a company that was still finding its footing. Fast forward to today, and Tesla has blossomed into one of the most valuable companies in the world. Now, you may be wondering why anyone would want to invest in junk bonds if they are so risky. The answer lies in their potential for high returns. Since junk bonds have higher yields than safer investment-grade bonds, they can be appealing to investors looking for greater income. For example, during the economic recovery following the 2008 financial crisis, junk bonds saw significant price appreciation, rewarding investors who took the risk. According to recent data, the average yield on junk bonds is often several percentage points higher than that of investment-grade bonds. For instance, while investment-grade bonds might yield around 3%, junk bonds could yield anywhere from 6% to 10% or even more, depending on the issuer's creditworthiness. This makes them attractive for those willing to accept the risk for potentially higher returns. However, it's essential to note that investing in junk bonds is not without its pitfalls. During economic downturns, default rates on these bonds can skyrocket. For example, during the COVID-19 pandemic, the default rate on junk bonds rose sharply, creating significant losses for investors. So, if you're considering adding junk bonds to your investment portfolio, it's crucial to do your research and understand the risks involved. One strategy some investors use is diversification. By spreading investments across various junk bonds from different sectors, they can mitigate the risks associated with any single issuer. Additionally, investing through mutual funds or exchange-traded funds that focus on junk bonds can provide a more balanced approach, as these funds typically hold a wide range of bonds, reducing individual risk. In summary, junk bonds can offer both opportunities and risks. They present a chance for higher returns, but with that comes the possibility of significant losses. Understanding your risk tolerance and doing thorough research is key if you decide to venture into the world of junk bonds. To wrap things up, junk bonds are high-yield, high-risk investments that can be appealing for those willing to take a chance for potentially greater financial rewards. They can be a valuable part of a diversified investment strategy, but it's essential to approach them with caution. If you found this video helpful, please give it a thumbs up and share it with anyone who might benefit from learning about junk bonds. And don't forget to subscribe for more educational content on finance and investing. Thank you for joining me today, and I'll see you in the next video.